Welcome back to our monthly dive into the Hamilton real estate market with April 2024 in the spotlight today. Let's break down the numbers and see what's really shaping our local housing landscape. In April, we wrapped up with median home value holding fairly steady at $749,000. That's a slight dip at just over 1% from March. And although we're up just over 6% from the end of 2023, we're not hitting the usual 10% increase we would expect by this time of the year, so a bit behind. And interestingly, this month's median price is virtually unchanged from last April, and we're still almost 22% below the February 2022 peak. Now, homes spent about 18 days on the market, mirroring the pace we saw last March. And frankly, no surprises there. March and April typically show similar market behaviors. What's more telling this year is the inventory numbers. We ended April at 2.5 months of inventory, slightly up from March and February, but well within historical norms relative to the month-to-month changes expected between Feb and April. So for the year, this number is running just under a month higher than normal compared to these months for the past decade. Now, sales in April were notably low, the lowest for an April since before 2014, except for the COVID-impacted April of 2020. There were 638 sales. Despite a brisk start to this year, March and April have lagged behind last year, which was already the slowest in over a decade. So are we heading into a quieter period like last year after May with a slow start? That's something we really need to watch. Now, new listings in April jumped to 1,265, which was up 19% from March, which is a big jump, however, just 4% above the average April number. But here's the clincher. The sales to new listings ratio went down to 50%, the lowest for an April in well over a decade. So this drop suggests a market that's cooling even further. Not yet a heavy buyer's market, but certainly more favorable to buyers at this time of the year. The proverbial hot spring market than we've seen in a long time. Now, ending the month, there were 612 units on the market, up almost 60% from last April, so big jump, and about 32% higher than the average for April. This year, on a monthly basis, we've consistently seen the month-end number with around 25 to 30% more inventory each month than is typical, reinforcing a continued higher than normal amount of choice for buyers. Now, with demand rate remaining stagnant, rates unchanged, inventory growing, we did see a modest price drop this month. It's way too early to call it a crash, but clearly something is going to have to give. Either demand picks up or prices will need to adjust. Yet, with housing still undersupplied for our population, any increase in demand could sharply push prices up. It's a delicate balance. And right now, if you have the means, I think locking in a variable rate and buying is still a wise move to make if you can do it. So we'll keep an eye on these trends and see what breaks first. Until next month, have a great May. And as always, for more insights and updates, make sure to follow, like, and subscribe. Share your thoughts or your questions below wherever you see this. I'm happy to keep the conversation going. Take care, and we'll see you in the next update.